Well, thanks, everybody. Great. Thank you for joining us this morning. Today, we're going over the market stats for the week ending December 19th, 2021 for the Greater Phoenix Metro Arizona Regional Market. Let's take a look at what we got. 35 days closed on market this past week, a month's supply of 0.78. Our absorption rate's over 125. We're sitting at an average list price of 730,000, average sale price right about 534, and our list price to sale price retention is sitting at 99.81. Inventory, we have 6,994 available single-family residential listings in the MLS today. That's down another 4.5%. We've been creeping down about an average of 5% per week. Pending is sitting at 4,482, and our closed units month to date at 5,477. New listings this past week, here's the story, down another 11%. We only took 1,500 listings this past week, and our story is we've got to stick around 2,400 to maintain our inventory. Days on market is sitting at 87.9 for the active inventory and closed at 35 days on market. Under 500,000 is comprising 56.27% of the entire MLS inventory. There's a little bit of a silver lining. I'm not sure exactly which price range it's in, but this is up about another 3%. This normally was about 72%, represented 72% of the entire MLS inventory prices under 500,000. This has dropped as low as 53%, and now we're sitting at about 56. So we'll see how that comes out at month end. Our $500 to $1 million market is comprising 32.1%, and that's up. That's really part of the inventory in which grew or expanded, if you would. That's normally sitting somewhere in the vicinity of 18%, so 32 is significantly greater. And looking at our $1 million and up price range, representing about 11%, that isn't really changing too much. The only thing that's really different here is 111 days on market, which normally is somewhere in the 230 days on market range. So again, a very, very brisk, even in excess of $1 million. So as you can see with our spreadsheet here, this is really what helps any of us become an expert while we're looking at these sheets. And what does that mean? That means that, if we don't have anything to compare it against and all we hear are new statistics, we really don't know where we're headed. So what we've done is we've provided you in the very center of the spreadsheet there. You'll see 2019 SW and identified in a goldenrod color. That's actually the same week in 2019 prior to any of the COVID issues. We look at 2020 is to the left of that in the salmon color, representing same week in 2020. And then to the left, we have this past week and the week prior. So once we have this ability, we now can take a look. We look at 1,704 listings last week, 1,500 this week. That's down 11%. But what you need to know is just because it went down doesn't necessarily mean that's bad. Slide your eyes across. Let's compare it to last year. Last year, we took 1,273 listings the same past week. So we took basically 300 more than we did last year. That's a good sign, not necessarily a bad sign. It's a red ticker because it's not helping the growth of our inventory. And in the slide your eyes a little further to the right, 1,490 would have been a number that might have been interpreted as being typical or customary for the winter season. So again, we're above that number as well. So silver linings for sure. And we have to take advantage of each of those. Looking at the active inventory, however, those great increases in weekly adds of inventory, unfortunately, isn't helping us out when it looks at the entire inventory. It was 6,994 total properties this past week. We had 7,350 the week before. We're just not replacing it. Last year, we were at 7,960. So we were a little bit ahead of last year a few weeks ago, and now all of a sudden we're lagging once again. But if you take a look at coming soon, that 6,994 represents 445 coming soon properties. It also represents 5,785 single-family non-distressed properties. It includes 620 new properties that are under construction or the builders marketing their materials, and that leaves 6,970 non-distressed. So way over on the left-hand side, you can see it says 99.7%. That number changes every single time we change the numbers. What that basically means is 99.7% of the MLS inventory is non-distressed. So the de-stressed inventory is less than 0.3 of 1%. So again, there's really nothing here to worry about. Even if you're listening to the national economists, your Lawrence Yun, your Ted Jones, these guys are all saying the same thing. There will be no shadow foreclosed inventory as a result of the foreclosure moratorium being lifted. Looking at pending is a great example because pending says, what are the meeting of the minds? What's actually happening in the marketplace? You've got people talk about a lot of buyers in the marketplace. Are we actually, how many people are going under contract where a willing seller and a willing buyer get together? 4,482 this past week, 4,800 the week before. Sliding your eyes a little bit to the right, in 2020, we were up as high as 6,500 people under contract, and right to the right of that, 4,234. So if we're going to say, how are we? Let's look back to that goldenrod copy, 4,237 versus 4,482. That's not what the green ticker is to the left. That meant it went up over week. But again, it has gone up. We are doing more business right now than we were doing in 2019. And again, keep that hat on that reminds you that 2019 was a banner year. We had absolutely significant increases in unit volume and significant increases in the average sales price. We're sitting at 5,477 month-to-date closings. We were at 6,449 last year, roughly. And again, the difference between the 6,449 and the salmon number of 6,591 is just the washed out year-end difference after the properties that really didn't close have been removed. But with 5,470, we were at 3,027 same period in 2019. So we're still banging these units away, even though we have less inventory. And again, as far as closings are concerned, you're not seeing anything here, very, very minute. Slide your eyes to the right if you could. Back in 2019, in fact, we just saw the shift change over the last 2 months. Prior to that, those numbers, there were like 60 properties in short sales. There was like 38 lender-owned properties and about 12 average HUD properties. So when you have that many properties and now you only have what's reflecting here, again, it's representative of the fact that there's just not a lot of distressed property selling. And again, one might say the reason why is because iBuyers have made investor buyers that much more accessible that they did prior to that. Prior to that, people had to go into foreclosure. They didn't know where the investors or people that had cash to buy their house were. And so they were buying properties at courthouse steps. They were buying properties through the HUD system. They were doing a lot of things. Well, today, the nice thing is that the consumers are being protected a little bit because what's happening is they now have new resources that they can pick up the phone and contact to be able to get a bid on their home. It might not be what they want, but guess what? It prevents foreclosure and maybe even prevents having to file for bankruptcy. So these are some good things that are part of that silver lining. 127% is where we're sitting as absorption rate. Average sale prices are at 730,000. Average list prices are at 730,000. Average sale prices are at 533, up a little bit over last week. A year ago, we were averaging about 432 and 369. Now, again, one last thing about this piece right here is just because you're seeing 32% increase in the sales price year over year does not mean the average property in the greater Phoenix market has gone up 30%. What this means is of the properties that are actually closing, what is the average sales price? So in this particular situation, you're just seeing a continual average. I think what you're going to find based on a lot of the readings that I have is at the end of the year, we're going to be somewhere between 9 and 13% appreciation on the average house in the greater Phoenix metro market. And that's still huge numbers because we've been averaging for the last 35 years that I've been recording it. We've been averaging about 5%, 4.5% to 5% per year appreciation. So these are some very strong numbers. We're not seeing, we'll go in a couple of weeks, right after the first of the year, we'll go into the 2022, forecast of what we're expecting. But as of right at this particular moment, it's still going to be a continuous year of cooling off as far as volume sales are concerned. We may not see as many volumes. The sales prices are going to continue to increase, probably not in the double-digit area, more like in the single-digit area. And thank the Lord for population increase, because when you have population increases, you have new business. It drives every market sector that has to do with new home sales, and that's everything from landscaping to painting to construction and everything. So these are some really good numbers. All right, that's the market numbers for this past week. We're not going to have any, Mike, until after the first of the year now. So if anybody needs anything, please reach out to me.
Yeah, and so we will be off for a couple of weeks due to the holidays. So just stay on the Facebook page, and you'll get the reminders after the first of the year when the webinar's back. Appreciate it, Todd, as always.